Tesla Motors is the most polarizing company I have encountered in my 10 years now working in the financial industry. Elon Musk has made many libertarian women swoon. He has convinced many libertarian men who do not know how to read financial statements that Tesla Motors is the next Amazon. And he even has Cathie Wood of ARK Investing, who actually seems to be a somewhat smart, but he has her totally bewildered that Tesla Motors will be some unique combination of Amazon, an electric company, a utility, a car company, a power company, and sell at a growth stock valuation. Oh, and a software company without CapEx. Some magical $4,000 per share price target. However, the last couple weeks have not been kind to Tesla Motors. There's been a ton of bad headlines and bad stories that have come out in just the last couple weeks. And this week, there was even two analysts who were considered very bullish Tesla stock analysts that have now flipped on the company, or at least drastically lowered their expectations. Now, Tesla's stock has not exactly done well. Tesla stock for the last 6 months is down approximately 40%, and in the last year is down approximately 26%. Now, let me read some of the headlines of some of the bad stories, the bad publicity that Tesla is getting recently. This is from May 17th. Tesla stock drops after a report that autopilot was engaged during a deadly crash in Florida. I believe the National NTSB, National Transportation Safety Board, confirmed that, and they're looking into it more. The $35,000 Model 3 is no more. Tesla raises prices slightly. This is from May 14th. So the $35,000 car that Elon Musk promised is not going to be delivered. In addition to that, today, news headlines just came out that the Model S and the Model X, he slashed prices. So on certain cars, prices are going up, and on other cars, other electric vehicles, prices are going down. Yeah, it's weird. The picture is not showing up. Let me see if I can re-add the thumbnail. That's very weird because it said it had added. Okay, let me continue with the headlines. Tesla suddenly catches fire in Hong Kong parking lot. This is from May 14th. So Tesla had to update their software after this problem, after claiming for quite a few days that it was a fake, that the video and the pictures were fake. Despite being all over Chinese social media, the owner of the car was adamant that the car was real. And continuing on the headlines, This has started to worry me the most and why I'm doing a live stream show. So this is from May 18th. Elon Musk is going to examine all Tesla expenses alongside the CFO. The new cost-cutting effort comes after Tesla laid off many employees in another attempt to reduce costs. So to cut losses, Tesla CEO Elon Musk has decided to personally examine and review every expenditure at Tesla, no matter how small, alongside Zach Kirkhorn, the company's chief financial officer. The media reported. Musk informed his Tesla team about the decision over an email that was sent to all employees. Electric reported on Thursday. The new cost-cutting initiative involves examining every payment, including, quote, parts, salary, travel expenses, and rent, end quote. Referencing to the loss of $702 million that the automaker suffered last quarter, Musk said the step is, quote, extremely important, end quote. Slowing sales were bad news for Tesla because the company always needs cash in order to pay its sizable debts, according to analysts. Tesla had a $2.2 billion cash position at the end of last quarter, and Musk said that it would not last that long with their burn rate. Quote, this is a lot of money, but actually one gives us about 10 months at the Q1 burn rate to achieve break-even, end quote. The report quoted Musk as saying in the email, which basically means if the company doesn't turn things around very, very quickly, they'll be out of cash in 10 months. So they will either have to raise capital, they will have to sell assets, or they will have to restructure in some type of bankruptcy scenario, or they'll have to hope and pray for a buyout. which rumors have been leaking on Twitter that a couple years ago, another company tried to buy out Tesla. I just saw that about an hour before I turned on this live stream. The Tesla CEO has granted the employees a few weeks to regularize, own, and improve their work-related expenses. Quote, "This is hardcore, but it is the only way for Tesla to become financially sustainable and succeed in our goal of helping make the world environmentally sustainable," end quote, Musk added. The new cost-cutting effort comes after Tesla laid off many employees in another attempt to reduce costs, the report added. Earlier this month, Tesla also closed a massive $2.7 billion capital raise in order to support its operations. Meanwhile, social media was taken by storm when Musk revealed that he himself puts in 90 to 120 hours of work per week to keep Tesla alive. Last year, after Tesla first achieved a Model 3 production rate of 1,000 units per day, Musk turned his focus to costs and encouraged everyone to make contributions. Currently, Tesla's market value is $61 billion, so this article's old. The market cap is down to, I think, $36 billion. You know, I don't see the picture. Do you guys see the picture? Because it's not showing up on my screen. Yeah, the cost-cutting measure should be done a long time ago. Christopher Irons of QTR podcast and the other Tesla experts he interviews, also on Hidden Forces podcast with Dimitri Kofinas, he interviews a number of the Tesla bears, and they should have been cost-cutting measures a long time ago. Honestly, he would have done less stock dilution if he would have done the capital raises when Tesla's market cap was much higher and the share price was around $400. High 300s, 400. So now the point is that a lot of Tesla bulls, and more of them this week, and I'll read some of those articles in a second, are now turning on Tesla. And the stock chart is not looking too kind. The last year especially, the stock topped a couple times. It hit around $376. It got to $379 on August 7th of 2018. It got to 376, just above that, on December 13th, and it's been making lower highs and lower lows since. It's been in a pretty pronounced downtrend since December 13th. And year to date, the last 6 months, Tesla is not doing well at all. And on top of this, a very normally bullish Tesla analyst, the guy's name is Dan Ives. He's from Wedbush, which is an investment bank, if you're not familiar. He believes that Tesla will have to raise another $1 billion in capital, he wrote in his research report and told Yahoo Finance yesterday. Quote, "We believe Tesla will have to raise another $1 billion in capital," end quote. Wedbush analyst Dan Ives told Yahoo Finance on the move. The former Tesla Super Bull slashed his price target on the stock again on Monday to $230 a share, down from $275. And the stock dropped. The analyst only a month ago cut his rating on Tesla stock to neutral from outperform. And in the investment banker speak, because normally these guys get a lot of business from companies, especially a large company like Tesla that's not generating free cash flow and consistently profitable, they are very wary of reducing the rating below neutral. So, and normally with investment banks, a rating cut down to neutral means sell. So Ives' cash projection is somewhat startling considering Tesla is freshly off a badly needed capital raise. Earlier this month, Tesla raised about $860 million by selling new stock and $1.84 billion through the issuance of convertible debt. Both efforts came despite Musk contending throughout most of 2018 that Tesla didn't need to raise capital. But with a stock price continuing to languish and terrible first quarter earnings in the books, Musk clearly had to take some form of action to shore up Tesla's finances. Keep in mind, Tesla's cash pile plunged $1.5 billion in the first quarter of 2019 from the first quarter of 2018. And this is before all this competition comes into the American market. You have Audi and the E-Tron taking deposits now. I don't know if they went on sale yet, but they're taking deposits. You have Jaguar's electric vehicle coming in the next 12 to 18 months. And then after that, you have Mercedes and BMW with 5 or 6 versions each. On top of that, you have Porsche's electric sports car, which is unbelievable. That's going to go on sale in a few years too. Indeed, a weak cash position is the last thing Tesla needs ahead of a Model 3 production ramp, because this is the problem with large factories. There's always CapEx overruns. It's somewhat similar to mining. You have to retool the factory. There's always CapEx. And if the factory doesn't come in on time and on budget and profitable and generating cash flow, there's always problems with dilution. Forays into robo-taxis. The robo-taxi stuff, about 1 million robo-taxis on the road. Come on, guys. That was just ridiculous. And car insurance. The car insurance thing, to me, seems like kind of a scam, where he would collect cash payments, kind of like how he's been collecting these extra money that you have to put in, the extra deposits for the autopilot. So I think there was 2 versions of the autopilot software he was collecting payments for. There was like the $3,000 version and the $5,000 version, and he's been collecting many millions of dollars in payments for those from people years ago. And whatever else Musk dreams up. Slowing demand for Tesla's pricey electric cars doesn't help the company's fundamentals. So long term, the electric vehicle market, there's huge demand for. However, and most people don't understand this about capitalism. Okay, it's not even taught in most of the books. It's not taught if you're an MBA student or a business student and you're reading a lot of these books. It's not taught that competition creates deflation, beneficial deflation for consumers. But in reality, this is why more competition is good. The more competition there is, normally the higher quality good and service at a reasonable or lower price the consumer is going to get. Choice is good. The consumer gets a chance to pick out which is best. This is why we have problems now here in the United States with the cable companies. Okay, there's only 5 or 6 major cable companies. That's it. There's very little choice. So capitalism is naturally deflationary when it's allowed to work, when there's free markets and competition. Beneficial cooperation and competition. It's naturally deflationary, which means that your Audis, your Jaguars, BMW, Mercedes, Porsches, they don't have to make a lot of money on their electric vehicles to hurt Tesla. They don't. Most people don't understand this. Most of the Tesla bulls will say Tesla is way ahead. And in fact, like a lot of the Tesla bulls, many of whom are libertarians and can't read financial statements, they also say on top of that, that Tesla is way ahead of the competition. There is no competition. And on top of that, whenever you say anything negative about Tesla and bring up the short sellers, they bring up how it's a conspiracy theory. So there's a conspiracy theory against Tesla, despite, the reality and all these analysts actually looking through the financial statements. It's all a big conspiracy theory against Tesla by these evil, greedy short sellers and corporations, by the car companies, the oil companies, the US government. I've heard like 6 or 7 different conspiracy theories about short sellers all trying to sabotage Tesla. When in reality, people don't realize that in order to build the first Roadster, Elon Musk had to get help from car companies. Okay, most people aren't aware of this. He had to get help from, I think Lotus helped design part of the car, and yes, there was problems with it, but the Tesla people didn't know what they were doing in a lot of instances. They had to get help, I think, from General Motors, and Toyota had to help them. Well, selling cars, if they met their production goals, they could raise capital, but Tesla should have raised capital a long time ago. When the stock price is higher, it would have been a lot less dilutionary. This is so weird, guys, that you can see the picture and I can't. I don't know, something's weird. Probably don't want me seeing the picture. Okay, let me continue with these articles. Okay, Tesla's problems add up to, and the other thing about the expenses, and this is an enormous red flag to me. So when Tesla had a $60 billion market cap approximately, and the stock has slid now down to $36 billion, a company with that type of market cap should not need the chief financial officer to have to signature and sign off on every single expense. Okay? I have never heard of that. And I've looked at lots of different companies in lots of different industries, and a company normally, with that type of market cap, they have cash flow, they have earnings, they have some free cash flow, hopefully. And they should not need to count every single penny. They should not need to look in the couch cushions for money. They should not need to do that. Okay? This is just poor, totally gross mismanagement by Elon Musk and his board of directors. The board of directors deserves a lot of blame too. And that is because either they have allowed it, or they have taken the money from Elon for bribes or whatever with share options and all these things. And also the bailout of Solar City, which was a lot of debt that Elon and his cousins and I think his brother were holding. They were holding a bunch of Solar City debt, and that's why shareholder capital was used for the bailout of Solar City. And also, I think SpaceX assets were pledged as collateral too for the Solar City. On top of that, there was also another article that came out about lack of production. Let me see if I can find it. I have literally 10 different articles opened up here about Tesla. Okay, here we go. Tesla is exporting most of its solar cells. So its Buffalo factory for Solar City, they're not even selling really anything. They purchased Solar City for $2.6 billion. It was extremely controversial. And this factory in Buffalo is not doing any of the stuff that was promised. They're exporting the solar cells that they do make, and they don't even make that many. They're exporting them out of the country. So all this integration that the shareholders were sold on, it was all a lie. And then also this week, okay, let me get the other analyst up, the other article from the other analyst up. The Morgan Stanley guy. Okay. We have the $10 worst case scenario price target now from the Morgan Stanley analyst. And that came out today. And the scary part of that, and Fred Hickey mentioned this on Twitter, is that Morgan Stanley is the company that is now holding the majority of Elon Musk's Tesla Motor shares as collateral. So if the Tesla Motor stock keeps falling, he's going to get a margin call. He's going to have to sell his shares. So this could be a vicious cycle on the stock. So not only does the company have to raise more capital because they're burning through cash, they're not efficient, but on top of that, the lower the share price goes, the more likely that Elon Musk will have a margin call, because he's pledged his shares as most. Okay, so Elon Musk's net worth, most of his net worth is tied up in stock. So in order for him to go and buy a mansion or his 3 mansions in LA, he has to pledge, he either has to sell some stock or he has to pledge some of his stock as collateral to go make purchases. And then he could buy off the margin debt he has on the stock. There's ways he could do that. So he either gets the margin call and has to sell shares to raise cash, or he can pay it off another way with profits from something else. No, well, you want a prediction on Tesla? They probably, I'm sure they're calling around for a buyout. So they're going to raise capital probably again. It's looking like things are bad, but they'll probably raise capital again in the next month or two. They're burning cash so quick, they're going to have to do another one. And you know what, guys? If they would have done this capital raise a year ago, even 6 months ago, it would have been a lot less. But Elon Musk and the board of directors are so stubborn, and they've made so many mistakes, and they have so much inexperience trying to run a car company, especially one that doesn't have a track record ramping up manufacturing, because that's difficult. There's always problems with manufacturing, especially manufacturing brand new products, brand new product line. And it's not like they had successful product launches where the manufacturing went off without a hitch. So it's not like they had 2 cars like the Roadster that were selling enormously well, that had really reliable cash flow, no production problems, and they could easily take some of those profits and subsidize some of their other cars. That's actually what should have happened. And that's what the major car companies are doing. You have GM and Ford, they have profits from other cars. So they can subsidize their electric vehicle bets that they're making. Yeah, I think Elon's sweating a lot of bullets. There's the theory going around that Elon wants out, that he's been trying to get himself kicked out for the last year or so, that $420 per share tweet may have been a desperate cry for help to try to get himself booted. But there's been other random and weird behavior of his that kind of screams that he wants out. He's made so much money off this thing, though. He admitted years ago, most people don't talk about this. He admitted, I want to say it was 3 or 4 years ago on Twitter, that he's bipolar. And you don't hear most analysts talk about that. But his behavior is really bipolar. And then there's all the articles and rumors about his partying with like alcohol and drugs and, you know, Silicon Valley orgies and Hollywood movie star parties and stuff like that. So he's burning the candle at both ends. He's working 90 to 120 hours. I don't know how often he does that, but he may be doing that sometimes. But if he's working that, then he's not sleeping, because then he's going home or on the weekends and raging like crazy. He's going to these raves and ragers and doing club drugs and all kinds of crazy stuff. Exactly, Little Cripple. This is a good point. And you have regular cars. The regular car markets are in recession. Although the electric vehicle market, there is long-term growth for there, especially in Europe. But a lot of the electric vehicle market, the demand for the electric vehicles in the United States is for upper middle class and rich people. That's where the real demand is. So Tesla Motors, after I think it's restructured, it really needs to be restructured. And there needs to be a lot better board of directors in there who are going to hold the CEO accountable. Unfortunately, the board of directors right now is really just a bunch of yes men, puppets for Elon Musk. And this is the problem. There's not good corporate governance. The company should have never had $60 billion plus market cap. It didn't have the earnings or the cash flow to justify that. Only Amazon has had a lack of earnings, basically, to justify that. And Amazon has like almost a monopoly of e-commerce now. I mean, Amazon's more powerful now than Standard Oil ever was. Your Amazons, your Googles, and your Facebooks are just enormously powerful at this point. They have virtual monopolies. You have Google and Facebook sharing a monopoly on online advertising, and you have Amazon with a virtual monopoly on e-commerce. And they're just wiping out their competition and buying off politicians. Wow, that's interesting. With Volkswagen, right? Yeah, I just saw there's actually a good documentary. It's a documentary series. Now, it was produced by a lefty, so he put in like the Paris Climate Accords and other things in there. But it's actually really good investigative journalism. It should have won an award in the past. I don't know if it did. It's the Dirty Money series on Netflix. And I just finished the first episode yesterday, and it's about the Volkswagen fake smog tests, and it was just very interesting stuff. And now I'm on to this. There's 6 episodes of this, it's all a documentary in each episode, like a shorter documentary. And it's good stuff. I highly recommend it. Now, there is a political bias because the guy watches NPR and he put Trump in the movie, bashing him for leaving the Paris Climate Accords and, blaming him for ruining the environment and other stuff. But overall, the quality of the reporting in there, like getting to the truth from how the Volkswagen people lied like crazy and other important details, I think that was exceptional. Millennials actually on Robinhood, on that free stock trading app, Tesla Motors is the largest holding. So I think you can buy with $1,000 or less, you can buy some shares on Robinhood, and retail investors are the ones who are getting fleeced in Tesla Motors. They've been the bag holders because you've seen a lot of institutional investors for a while now drastically reduce their Tesla Motors positions. Hey, thanks for the $10 super chat. I appreciate it. Choices36 says, government-aided capital destruction, emission credits, $7,500 car credit. Tesla will lose their credits, and competitors who don't need to make money on their electric cars will sell cars with credits. And have you seen the commercials for the electric cars, the new electric vehicles? I mean, the Porsche one looks amazing. The Audi E-Tron looks pretty solid. The SUV one, I think they also have a couple other models. Tony Stark in the Avengers Endgame movie was driving the new Audi e-tron, the sports car version or the sedan. That thing looked pretty good. So, I mean, there is a lot of competition coming over the next even 1 to 4 years. And it doesn't really have to make money to hurt Tesla. So the people who are bullish Tesla don't understand this. The competition with electric vehicles does not have to make money to hurt Tesla. If you understand capitalism, you will understand that it will hurt their margins. It will hurt their market share. So Doug Casey says that the Pioneer So Tesla was a pioneer. They deserve a lot of credit for innovating with the electric vehicle. But like Doug Casey says, and Doug Casey's a brilliant investor, he's been doing this longer than I have, and this is not always true, but it's true a lot. Doug Casey says the pioneer always gets shot full of arrows. And it's, you know what? That's exactly what's happening to Tesla right now. The pioneer always gets shot full of arrows, and Tesla's shortcomings, their screw-ups, are being exposed because he has such a large social media presence. He's picked fights with people online, and he's cyberbullying people. I mean, he went after a graduate student. Do you think graduate students have money? But the guy was accurately reporting on things at the Tesla Fremont factory, and Elon didn't like it. And so now you have over $100,000 raised for this guy's legal fund. And on top of that, I believe there's another $200,000 or $300,000 that people, hedge fund managers and other financial professionals who do not like what Elon's doing to this guy, trying to ruin his life and get him kicked out of his graduate program, which, by the way, would cause him to go well, he couldn't default on he would default on student loans, but he couldn't discharge them in bankruptcy. But there is a lot of money now who want this lawsuit to go to discovery. So, Little Cripple, I agree with you. Tesla has made some pretty good cars. There are problems with them and getting them fixed, but overall, a lot of people tend to like the cars. However, they've had so many problems with them, and they didn't make money really consistently building these cars. So now they don't have as much of a lead as Cathie Wood and others think they do. You have all these people now in the last 6 months, especially the last week, turning on Tesla, who are bullish on Tesla. You have the Electrica blog too, who's starting to get angry at Tesla. So you have a lot of people who were super bullish Tesla turning on Tesla. That's always a bad sign. This is the funny one. All the millennial boys love Elon and will donate to him to help avoid bankruptcy. He has a cult following. I don't know if there's enough people that donate to avoid bankruptcy. The debts are massive. Tesla does need to be restructured. There is a market for upper middle class sedans or rich people sedans, electric vehicle sedans, and high-end electric vehicle sports cars. That is a good niche market. Now, obviously, Tesla has shown, and they just raised the prices, they cannot make a $35,000 car electric vehicle for the masses and make a profit on it. This is a good point, Tom. I think I've seen one Tesla commercial. I think it was like years ago. I think I saw one Tesla commercial. Yeah, otherwise their marketing hasn't been good. He's tried to avoid the dealership model. The dealership model would be easier for getting repairs done for charging stations. A lot of his promises he hasn't kept. And as long as the stock price was going up, a lot of people didn't care about that. Actually, I did see a Tesla. This was years ago. This was like 3 or 4 years ago before TSLAQ. And before I got interested in learning more about Tesla, I actually saw a Tesla like 4 or 5 blocks from where I live. And it got in a car accident. And the fire department had to put cones around it and yellow tape, and it actually did catch on fire. I wish I had back then taken pictures and video, because I would have been famous on Twitter. But, this was before I was learning about Tesla. Hey, Greg, I'm sorry to hear that. I think ultimately the company can be restructured, and they can start, once they get a better CEO in place who actually knows how to meet production deadlines and run a auto company more efficiently. And the people are like, Tesla's a software company, Tesla's a power company, Tesla's a utility company, all these different things. No. Tesla can't do all these things well. Peter Lynch called it diversification. And it's true. You can't be all those things. And you especially cannot be all these things that Cathie Wood is claiming and have a growth valuation and a $4,000 per share price target. And let me tell you why. Because you have to have better margins and you have to have consistent free cash flow. The odds of being in Amazon and getting that type of valuation are low, especially when you get into utility and energy. Those are very capital intensive stuff, along with auto. The CapEx or capital expenditure for utilities, energy, auto, those types of things, CapEx is high. CapEx for a software company, normally not as high. That's why a lot of value investors for a while now have liked a lot of software companies, because software as a service and others, their CapEx is lower. They don't have to retool a factory. They don't have to invest in property, plant, and equipment for a mine or oil wells. They don't have to do that. John says the lemmings have autopilot mode on. I wouldn't put autopilot mode. I've seen, did you see the Real Vision TV documentary that Grant Williams made? It showed both sides of Tesla bulls and bears, and Grant Williams was riding in the car with Ross Gerber, and Ross Gerber on the highway in California, he put Tesla on autopilot, and Ross Gerber took his hands off the steering wheel, and just seeing Grant Williams' face while this was happening and it was filmed was priceless. You can go back, this was a few months ago in Real Vision Television. If you have a subscription, go back and watch Grant Williams' face. It was funny. And Grant Williams, by the way, is a Tesla bear, but he tried to cover both sides of Tesla, I think, very accurately. I think he did a good job. So I have a bunch of Tesla articles. There is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 Tesla articles open right now. So I'm not going to have time to discuss all of them, but I just wanted to give you guys this outline that things are flipping on Tesla. Bankruptcy and the stock crashing are a process, though. So this is not financial advice, just my opinion. But Tesla is probably, the stock may have some rallies, but I think what will probably happen with a lot of traders and hedge fund managers is every rally or short squeeze will then be sold off, will then be faded. And then people who were either not short or wanted to increase their short positions on every rally will increase their short positions. So this is a process. This will take at least a year, I would say, depending upon how stupidly Elon Musk and the board of directors decide to raise capital. So if they mistime things and screw things up, that could accelerate bankruptcy. I'm sure they're also probably trying to reach out for a buyout. That story I saw on Twitter today looked like they were trying to spread the rumors that they had other companies interested in paying a much higher price for a buyout. So that to me looks like a story they planted. Maybe because there is favorable journalists that still like Elon Musk and Tesla Motors, although he has pissed off people like Lynette Lopez. And I highly recommend, if you want to learn more, there's a TSLAQ podcast and Hidden Forces, which is a free podcast. Dimitri Kofinas interviews Tesla bears. He's been covering this for years. For the last couple years, at least. Okay, you guys can see the picture, but I don't. This is the first time this has happened. That's very weird. Raising capital is finicky. Okay, if Tesla would have met or exceeded its production goals and showed progress, it would be way easier to raise capital. If you have cash in the bank, if your stock price is higher, if you're meeting or exceeding production targets, it's very easy to raise capital. And Tesla, when the stock price was much higher, they should have raised capital then. Hindsight's always 20/20, but the blame goes to Elon Musk and the board of directors, his yes men, for not doing it back then, because the dilution would have been even less. And until Tesla is consistently profitable and can generate free cash flow, they're going to be burning cash. They're going to need to raise capital. They never should have had that super high market cap of $60 billion or more in the first place. This company, operationally, what the CFO is doing, it is basically a penny stock. Okay, only tiny little companies and penny stocks, not companies with $60 billion valuations, have the CFO, Chief Financial Officer, sign off on every single expense. People can love the product and it can still be a bad business. Look at GoPro. There's tons of companies that are good products and bad businesses. There is a list 1,000 companies long over the decades of companies that had a good product and were a bad business. American expat says he's seen one Tesla in Russia. Most of the time, it is unable to run in the weather and road conditions here. And this is what the larger car companies are learning from, because if you saw on the Audi E-Tron commercial, they showed with clear German engineering that the Audi E-Tron was tested in the rain and the snow and the sleet and bad weather. They showed that immediately. And there's all kinds of not production problems, but car accidents of Teslas in bad weather, where the salt and the gravel up in Canada in the bad ice and snow up there in the winter, it destroys the bumper, destroys the paint. And frankly, if Tesla would have tested this out better, like other car companies do before releasing the product, they would have figured this out and they haven't done any recalls, right? So I don't even know if they can afford a recall at this point. Recalls are expensive. This is hilarious. Tesla is like the F-35, way too expensive, and it will take the Chinese to make it work properly at a good price. Well, Tesla's Gigafactory in China is working now. I just saw pictures. It looks like it's not operational yet, but the building's done. So at least that's done. But, you know, doing business with the Chinese at that scale, and especially the other thing most people don't realize is Chinese auto numbers are down a lot. So maybe there will be rich Chinese people buying Teslas, but the middle-class people in China probably won't want the car. Not unless the Chinese government forces them to. Maybe there's some type of mandate. But the way things work in China, I could see like within a year, once that the Gigafactory in China is open, I could see within a year or two, most of the Chinese auto companies have already copied all their designs. And there's no intellectual property there. So Tesla can't sue them to get any money back. Oh, I'm not talking about buying Tesla stock right now. Instead of buying garbage companies on sale, you'd rather buy great ones with no debt on sale. Well, I'm not saying to buy Tesla shares. I'm just talking about how there's really bad news coming out, especially in the last week, from two analysts who just downgraded the stock, said they needed to raise $1 billion in capital immediately after already raising almost $3 billion in capital only a month or so ago, give or take. And then the Morgan Stanley analyst today issued a worst case scenario that Tesla stock is only worth $10 per share. I disagree. I think in a worst case scenario, Tesla's totally bankrupt and equity is wiped out and restructured. So I think he's being too kind still. And this could, depending upon how bad the mistakes that Elon Musk and the board of directors make, this could all be over in about 2 years. Because as the share price goes lower, those margin calls for Elon Musk's large share position are going to accelerate. He's going to have to start dumping his stock to pay off or raise cash somewhere else. So either Tesla turns things around operationally and starts making money on the cars they sell, and they're trying to produce even more cars now. So that's difficult because there's always problems if you're a new company and you're ramping up production. It happens with miners, happens with companies with factories. There's almost always production problems. Is Tesla a Ponzi scheme? Well, they sell a product a lot of people like, but a lot of their financing and the way Elon Musk has lied to shareholders is P.T. Barnum-esque, and it is snake oil. And a lot of his presentations for new products, like the solar panels that go on roof shingles, like the roof shingle solar panels, that product is totally fake. Go and listen to the Hidden Forces podcast with Tesla charts from a couple weeks ago. And he is from the solar. That guy has a STEM background. He worked in corporate America. He won't identify himself because he wants to stay anonymous because Elon goes after people personally, tries to ruin people's lives. He's doxed people. Hey, Bill, you liked my Rare Earth show, the last video? Okay, well, there's just so many Tesla articles, and I'll attach them in the information section of this video. I do not know why the picture isn't showing. I think it's hilarious. But I look forward to you guys commenting more in the comment section under this video after the show's over. But the bottom line is, unless there is a production miracle and profitability from Tesla, and Elon Musk and the board of directors suddenly figure out how to work things better and when to raise capital, things are going to get a lot worse in the next 6 to 12 months for Tesla Motors. I don't see sales in China taking off too crazily, especially because the Chinese market auto sales are down across the board. Now, China has a much larger car fleet, but in general, car sales are down. I think they dropped quite a lot. They dropped more than 20%. And car sales here in the US are down a lot too. The electric vehicle market is doing well, but there's about to be a lot more competition. And I think a lot of the demand for a lot of the other Teslas, like the Model S, the demand is saturated. So they don't have an enormous backlog. And there's just tons of evidence on TSLAQ with people who are looking through Tesla dealerships. And, well, they're adjacent parking lots. And they're seeing all these empty Teslas sitting in parking lots. So it looks like they produce the cars and they're not selling, or people return the cars and they're sitting there or sold them. And that's why Tesla is leasing a lot more cars lately, because I don't think there's a demand to buy. So I think that's why they're going after leases now. Okay, well, we can talk more about Tesla in the comment section under the video. I'm sure some of the Tesla bulls are still going to show up, although it sounds like there's a lot less Tesla bulls lately. And hopefully there won't be any name calling. If you have an argument and you disagree with things I said about Tesla or things the other listeners in the live chat said about Tesla, please try to be respectful. Okay? If you disagree, please try to be respectful. Provide a counter argument. But it looks like things over the next 6 to 12 months are going to get a lot worse for Tesla, barring some type of miracle or some type of drastic improvement from Elon Musk and his board of directors. Operationally, things are not doing as well as they should, especially with the debt position Tesla has and their lack of earnings. Okay, bye for now.